All right, here. You can obviously tell this is not professionally recorded because I just took a sip of Starbucks iced tea. All right, what I want to do here is I want to do an overview of how the big beautiful bill affected real estate. And it there's obviously it was a huge bill and there's other things, other businesses. There's a lot of great things that I saw. I only put together a presentation on the things in real estate that it affected. And even with that said, I want to note there at the slide, you'll see the presentations for educational and entertainment purposes. This is not to be considered legal or tax advice. There's a lot of interpretations, a lot of things that are abbreviated. And certainly, I'm not in the business of giving legal or tax advice. However, I'm very excited about some of the real estate changes or some of the things that stayed the same. What I do, mainly what I do, is I work with institutional and private equity investors who are investing in multifamily or industrial and other types of commercial real estate. Some of the things in these slides will absolutely address that. So if you're in that world, you should definitely pay attention. If you just like to know what's in the bill, great. This is for you. Um, if you're trying to figure out something with your single family portfolio, I think there are some things like the capital gains going unchanged. That is good. I'm not sure if there's a ton in here um, that's changed, but let's go through it. A lot of it, I'm just going to read the slides as is. I'm not going to try and do a lot of interpretation. I'm sure there's errors. I'm sure there's some things that won't make sense. But let's do the best we can here. I think a lot of people want to know what the heck is going on, and let's just focus on the real estate. All right, and I'm going to try and keep this to I don't know 8 to 10 minutes. If I go long, I definitely don't want to exceed 15 minutes. So just so you know where you're getting into here. All right. So the residential, oh, look at that. I already went straight into residential, and I said I didn't know if I would. So residential real estate impacts. This is good. The mortgage insurance deduction has been reinstated. Now I don't even remember that I knew that that went away. So that's a big deal. So there's additional write-offs that you can take. And there's a state and local tax cap. I didn't like this when it passed originally. They capped it at 10,000. If you made an income of $10,000, I'm sorry, if you had write-offs of $10,000 a year, then you were maxed out at what you could write off. I didn't like that, and there's a lot of high income states, too many to mention. We always like to mention California and New York, and now they've raised it to $40,000. So that's good. What they're going to do after 2030, I don't know. Hopefully, they'll continue to push that out. But for right now, I'm very glad to see that this bill raised that to $40,000. I'm not extremely familiar with the low income housing tax credit, but what I do know is that because my clients are buying multifamily, and hopefully some people who are watching this are also in the multifamily or commercial acquisitions, this will be important. The low income housing tax credits is important. Now, says it's a residential slide, so it may very well help you on single family rentals as well. I don't know exact all the details. If you want to add comments at the end of this that say, Joe, can you do a video on low income housing tax credits or anything you felt I skimmed over, please do so. I'd like to make a series of these, especially where you think I fell short and you don't want to go dig around and do the homework. I'm happy to do that. All right, so we'll just leave it at that. The low income housing tax credit's been expanded. As far as the 1 million plus units, not quite sure what that means. Sorry about that. All right. Again, I guess I felt the need to put this in here twice. This is not tax advice. Please verify these numbers, especially when it comes to charts that I've pulled off. You don't know if they're even accurate. So as best I can, this is a summary of what I just said. So the $10,000 state and local tax deduction was 10,000, and it was, I guess, at the end of this year was ending, and now it's $40,000 from 2025, and it'll gradually go up till 2029 29, 20, 30. Now, the child tax credit, I'm not familiar with that is, so I'm just going to basically read the slide. There was a max credit of $2,000 per child, and there was a refundable portion of $1,700, and now that credit has gone up to $2,200. I apologize for the iced tea break. That's how you know this is not an edited, slick video. All right, I think I meant to put something in here, but we've already addressed this twice. The bill is restoring the deduction for mortgage insurance, and apparently that was not a thing. So that should be a good thing for additional deductions. Commercial real estate, this is near and dear to me. So commercial real estate and depreciation. So this I could do a whole video. If you want me to do a whole bonus depreciation, there's a lot of people who already do this. So you can write off a lot of things, a lot of the assets in your buildings, and you can do it in the first year. Apparently that was going to go away. And so I think people were holding off on buying property. This is actually really good for people buying multifamily and commercial. Again, that's the arena I'm in, so I'm happy to see this. I don't know what Section 179 is. So to say the cap raise to $2.5 million, I don't know what that is. Again, if you want me to do some research and do a video on what that is, happy to do that. Cost segregation. I don't know why they bounced around here. So now back on cost segregation studies, yield accelerator write-offs, which is what I just said in the first bullet. So, and that's what cost segregation was. They would come in, you hire a cost segregation firm or CPA, and then they can tell you what you can write off and in that first year. So definitely use somebody who specializes in cost segregation. All right. Opportunity zones. It's a term a lot of people hear. I don't think it really affects too many people. When you sell a property, if you were to exchange it into a fund, for some reason, I think it has to be in a fund, in an area designated an opportunity zone, there were tax benefits. I don't know if you could just go buy an individual asset in those and still get the same benefit. That's again something you can ask an attorney if that's what you're thinking, if you want to go buy in different areas. So having said that, some of those tax benefits apparently were going to expire. And now let's just read the slide. So the opportunity zones were made permanent with rolling 10-year terms. There are new qualified rural opportunity funds. I don't know anybody who buys in rural areas. So if you do, if you're interested, that's again maybe something else I can throw together another video on that. This part I like, the continued capital gains deferrals and exclusions. So whatever you knew about capital gains, and I'll tell you why this is a big deal. For at least 10 years, every time I went to a real estate meeting, especially the commercial ones, oh, it might change, it might change, it might change. I mean, for 10 years, this is what we've been hearing. And you know what we finally get to say? It's not changing. So any investor should be really, really happy with this. And I'm glad I'm doing the video because that might have been buried. And all the other stuff you're going to hear about the bill, you might not have known about that. So I think that's a huge deal not to just be buried right here. All right, how are we doing? We're at 9 minutes. All right, let me pick this up because I told you I wouldn't go long. I do want to read this just verbatim. I don't want to interpret everything. So the low-income housing provision could lead to more rental properties. Every state's trying to get more housing, so I think everybody knows that. Not everybody specializes in providing low-cost housing, and that's a nightmare when you're trying to acquire it. And if you don't get certain tax credits, it could be a nightmare. So this is a really good thing for people trying to acquire apartments or possibly existing. Let me just go ahead and read it. Another key provision of the bill expands the low-income housing tax credit for builders who create or rehabilitate rental housing for low and medium income renters. The low-income housing tax credit remains the nation's most effective tool for building and preserving affordable rental housing. And we don't need to quote somebody I don't know. Looks like he's a big deal, though, huh? CEO of the National Housing Conference. All right, we're going to assume he knows what he's talking about. So these changes are expected to produce or preserve more than 1 million additional affordable rental homes between 2026 and 2035. Um, if you're into buying and providing those, that's a big deal to you. And if you're just worried about what kind of housing is going to be built near you, you probably don't care about this as much. So let's go on. Um, I'm not too familiar with the energy credit phase out or what it is. So, again, if you want me to do more research and do more videos, just tell me the topic. So I can just read this to you. I don't know what it means. I don't know what 179D, 45L, PTC/ITC phased out. Projects must begin soon to qualify. Um, Maybe the builders might care about this. And let's see. So some final thoughts here. So apparently the new what's passed is best for buyers in high tax states, which is what I said earlier about California, New York, etc. Um, the cost segregation and depreciation, which we talked about a little bit, is major tax savings. That's actually really big. Anybody doing acquisition, that's huge, and that's what I do. Well, I do it for clients, so I'm excited about that. Um, Opportunity zones, excuse me again. Um, yeah, we covered that. And as far as acting fast on green projects, we covered that. I didn't know whether that was a big deal. There are builders, though, who specialize in building green projects. So I know there's a lot of that in California, probably nationwide. So probably a big deal to them, developers or builders. And what's a slide presentation without giving information about the speaker? So mostly what I do is, so I'm a licensed California real estate agent, and primarily I'm doing acquisition and disposition for um, companies that buy multifamily and industrial real estate. And there's my Department of Real Estate license number for those who want to check up on me. Right now, we've got about 30 private equity investment company buyers. So almost everything in here is going to apply. That's why I keep saying if you're into multifamily or acquisitions, there's a lot of this that will apply to you. Oh, we're almost at 13 minutes. Let me finish up here. Um, so most of you won't care about this, but cumulatively, I've got $500 million throughout my client base that I can put into mostly multifamily. And so if anybody is in that world at all, you know somebody selling, you know somebody buying, certainly I'm available for questions about that, reaching out to me. There's my contact information. I thank you very much for listening, and we kept this under 15 minutes. Appreciate that.